Chris Preston.
And I'm Brad Simmerman.
Welcome to Street Check, the best podcast in the history of Cabot Wealth Network, which has been in business delivering investment research ideas and stocks for more than 50 years. Brad, welcome back. You were in Chicago for your birthday. Happy belated birthday, by the way, last
Thank
week.
you.
Um, so I guess you took in a Cubs game. Um, when went and broke into a neighbor's pool, um, drove someone's dad's car, and then sang in a parade. Is that right?
Yeah, close. Let's see. Cubs were out of town. They were in Milwaukee and St. Louis, so
Too bad. Too bad.
did not go to the friendly confines of Wrigley Field.
That was a Ferris
Uh,
Bueller reference, by the way, just for anyone.
I was like, I got it. Tell me. I forgot we have listeners.
Yeah.
Um, no, somebody did call me the Sausage King of Chicago. That was as close as I got to any of that stuff.
Yes.
No, we went to the Field Museum, which is the natural history museum downtown next to Soldier Field. We saw Navy Pier, grabbed some deep dish pizza there, which is the most tourist thing you can do in Chicago is get a deep dish. Nobody there actually eats it, but I like it. Uh, and then we actually saw the Home Alone house, which it's my daughter's favorite Christmas movie. So we're like, all right, we're gonna go to the Chicago Botanic Gardens. It's like a 15-minute detour. We're gonna swing by and take some photos. And there was some Northwestern grad student doing a journalism project there that got her on camera giving her take on like why it was meaningful or why it was important for her to visit that house, which was kind of a fun little thing.
Cool. Sounds fun. Well, we made it by Tyler and I, Tyler London filled in last week. He actually had I don't know if you've listened to it. I don't blame you if you have not. He had a scorching take. We didn't do the defend the take segment. We had a scorching take that the Fed will not cut rates at all this year. He just sort of dropped it in there. Like, whoa,
Hmm.
that's our defend the take for the week. But
That's a hot take. I
hey,
can't say I totally agree, but I think
no,
for
in fact,
maybe different reasons than
I'm gonna have one that refutes that in just a second, but not refutes, but is a direct opposition. But yeah, tell people what's on the agenda for today.
So, we are going to talk about this little market swoon that we've had for the last couple of months where we've seen really no net progress. It's an election year. We're going to talk about what we can learn from election year patterns in the past. And then we'll talk software stocks getting blown up on earnings. And after that, we're going to do a buy, sell, and hold for a number of different stocks. But before that, as always, it is your week to defend the hottest take you can think of. This week, the GDP lower revision will spook the Fed into making their first cut in the third quarter. You have 90 seconds. You may begin.
Yeah, so this is a less hot take than Tyler saying there'll be no rate cuts this year. It's been expected that there'd be at least one cut this year. I mean, some people are still clinging to the three cuts prophecy, which I don't see. But September has been kind of when people have thought when the first cut would be. But people have been there's been less certainty around that lately, especially with some of the hawkish Fed speak. I don't know why there's not just one voice with these people. Like with the sports team, they just all come out and say very different opinions, and the market just, moves with every single one of them in both directions. But anyway, yeah, GDP down to it was 1.6% initially in Q1. It is now was just revised down to 1.3%. And that's down from north of 2-3% from the prior quarters. So you can see the pattern. You can see the trend, I guess, better way to say it. And the Fed can see it. I think this is going to spook them into maybe not accelerating their, I think September is still probably the most likely time for the first cut, but I think this will cinch it, in my view.
All right. A little bit short on time there, but so
Sure. Wow. Okay. I was a little worried. Yeah, I
no,
can keep going a little bit.
no. I think you're good. Now that I've stepped on it, I think we can call it.
Yeah.
Um, yeah, I think cuts are coming. I don't know about July. I wouldn't be stunned if
Yeah,
we
that
saw a
maybe
cut
that's the
then,
hotter take that July could be more on the table now. You
but
know,
with the
I'd
GDP,
still
just
guess September, but July wouldn't shock me.
Yeah, and just like the nature of the GDP revision, where low end consumers especially are feeling it. I think what new and used auto sales dropped a little bit or something like that, but high end consumers are still spending. It's a bifurcated economy right now. I know the headline jobs numbers are look better or are revised better than maybe a lot of people in the sort of lower part of the K feel. But there's some weakness under the surface, and we're seeing it in the stock market too.
Yeah. Yeah. So now just bringing up the Fed Watch tool, CME Group Fed Watch tool numbers, it's still just a 14% chance of the first cut happening in July. But I think that's up from what it was. And then September is now 55% chance of either one or two rate cuts by then. 7% think two cuts by then. I don't see that, but I think we'll get one in Q3.
Yeah, yeah, I think that's a very reasonable take. Not quite scorching, very
Yeah, no,
reasonable.
Tyler's no cuts is still a way hotter take, but I think I'm more likely to be right, and that's what we strive for here. Okay, let's move on to our big three. Let's talk market since you were gone last week. I mean, lots changed in the 2 weeks since we did this. Last time we talked here was right around the top in mid May, and the last 2 weeks it hasn't been straight down, but the market's down. S&P is down about 2%. Nasdaq a little more than that. Growth stocks under the surface have been even worse. Small caps, as I talked about with Tyler last week, in particular, down. And you go back 2 months, S&P is down. This is one of your takes that has actually worked out. I think you said, Mark. I think you said at the end of March that the market had topped at least for a little while, and it has. It briefly got above current levels, got to new highs a couple weeks ago, but has since pulled back. And while May has been up, hasn't been enough to erase the pullback in April, and we're down in the last 2 months, slightly, but down. And we're really seeing a bit more selling the last week or two.
Yeah, one of the good takeaways that I saw came from Rosenberg Research, who I'm not on Twitter, I don't follow, but if you are on Twitter, I would think that following them would be good. They tend to have really good perspectives on things. They attributed a lot of it to the run up being about, they said four parts valuation, multiple expansion, one part earnings growth. So
Hmm.
the market got ahead of its skis here. We bid up, we being the market, the royal we, bid up stocks, especially growth stocks, especially stocks that had an AI angle and that had a tech angle. And now that earnings are coming in, there's not there's not really room for upside surprises. So even a company like Dell, which I think I'll bring it up in our buy sell hold, um, they lost 20% after beating on both the top and bottom lines because people are paying prices that don't reflect the reality of earnings growth. And that was sort of my stance a month ago when we were talking, when I was saying the market seems toppy. I believe my exact words were it wouldn't go higher. Of course, it went higher by like 2%. So it's enough to make me wrong. In when it counts, when we do the hot sauce challenge, I'll be wrong
It's
there.
coming up, by the way. I think next month
But
it's happening.
but we've talked about this before. The tough thing is like, all right, well, there's no there's no on or off switch for fundamentals and for valuations. They don't matter until they do, and then once they matter a lot. And it feels like we're seeing more rotation too, where it's not enough to get the major indices moving higher, but we're seeing like utilities run up or we're seeing gold run up, and it's not enough to drive us to new highs on the major indices. We're at high valuations, and hopefully that just translates to choppy trading for the rest of the year and not a meaningful decline, but we'll see.
Yeah. Yeah, I mean, after the kind of run up we saw from November through March, 5 months, five straight up months, up a lot, November, December, January. 2 months of down to sideways is to be expected, especially with valuations high as they are. When Jacob was on here Jacob Mintz, our options trading expert, was on here a few weeks ago, and he was saying, what things I like now or that are acting well now are gold and utilities and financials. Those are things that usually are acting well in a very defensive market.
Yeah.
And that's sort of that to me was a bit of a yellow flag in and of itself, even though the market as a whole was at all-time highs or near all-time highs at that point. It's like, no one's really, there's no risk on here. And we're seeing the risk appetite is, still not there, especially not there the way it was, 5, 6 months ago.
Yeah, but there's also no run to the exits that we're seeing
No,
yet, right? Like
no.
nobody's like, "Oh God, it's all falling apart. We need to get out immediately." It's like, "All right, well, we had a really good run in these names and these tech names. We're going to take profits. We'll keep a smaller position and we'll allocate to stuff that is maybe not been the beneficiary of the run up." Although I don't know what Tyler's take was on small caps. It seems like they've been maybe doing a little bit better lately, but kind of left out of that rotation a little bit more than I would expect. But it could be a symptom of there not being a huge risk appetite right now.
Yeah, we found that I actually found this while we were on the podcast. I'll pat myself on the back for this one. It's the Russell 2000, and at least as of a week ago when Tyler and I were on, the Russell 2000 small cap index and the equal weight S&P were basically similarly exactly flat since the start of 2022. So it's just, I don't know that there's a huge difference between small caps and large caps, except for 7 stocks, Mag 7,
Yeah.
and probably a few other, big AI type plays that are just been carrying the market. There's been some exceptions. The rally November through January at least was real. It wasn't just the Mag 7, but for most of the last year and a half that the bull market has been in place, it's been the same stocks pretty much.
That definitely lines up with the higher interest rate environment, right? If you're running a
Yeah.
portfolio and you're positioning yourself for the long term, um, you know, you're not piling into growth equities in a high interest rate environment. You're sort of buying your allocation of most stuff and then just sitting in it. There's not a huge impetus to double down or buy more or run out of it. And I do think the AI bubble rally, whatever we want to call it, that juiced returns broadly, and will continue to do so for as long as that narrative is intact. But otherwise, we're just seeing sort of stable, not super impressive equity returns, which is consistent with what we would expect if we're in a higher rate environment for the foreseeable future. I do
Yeah.
think it makes bonds more attractive if the Fed it gets spooked in Q3 as you anticipate.
Yeah. Okay, let's move on to number two in our big three. I did sort of a deep dive earlier this week, my Cabot Value Investor issue on election years. What is the patterns are from the market? And obviously, history. Yeah. What is the phrase? History
It
doesn't
doesn't repeat itself, but it rhymes.
rhymes. Yes, there it is. So the last 20, so this dates back to 1944, the last 20 presidential election years in the S&P. First of all, the market is on average is down, or no, sorry, less than goes up less than normal in election years. Up 7.2% is the average. Normally the S&P is up 10% in a given year. The pattern is similar. I'll even look back at the last few elections. It's the same as the historical pattern. What usually happens is the market has a run up through basically August, and June through August, usually mid-August, is usually pretty good time. There's usually a pause in the spring, like we've seen this year, and then sort of a who knows what it is, but June through mid-August, there's some buying that happens, and then it stops from mid-August until the election. Now, after the election, and this is always doesn't matter who's elected president, what party's elected president, there's an exhale and people start buying again. Happened after Biden won, happened after Trump won, and those are the two people running again this time, at least for now. No, they're running. And happened after Obama. There's an exhale. But the 3 months prior to the election is a really tough time to make money. The stocks are usually down. S&P is historically down. The time to make money is the next 2 to 2.5 months. So I think especially coming off of um, a couple sort of blah months. My guess is stocks will be higher in the next couple of months. But between now and election day, I don't know, they'll make a whole lot of progress.
Yeah. Yeah. I don't one of the things that I'm sort of wondering about, right, is like there's the known quantity element, and I don't
Mhm.
have those figures. Like, what's the do you have any stats on like rematch
Yeah.
stuff?
Yes.
'Cause-
Well, rematch. Well, this is pretty. I mean, this is pretty rare to have a
yeah,
rematch of
well, so
two
that
former presidents.
yeah, so I don't think you've got a rematch of two former presidents unless you go back to like Teddy Roosevelt,
Yeah.
maybe. But you
Yeah.
had like you had a contender rematch with what, Bush v. Gore in like '06, but or no, trying to think what the cycle whatever. We don't have a historical precedent for this
Right.
one, but they're both known quantities, so you sort of lose
Yes.
that speculative element. I also think that both of their policies are inflationary. Trump via tax cuts and spending. I mean, like maybe if he comes and cuts Social Security or handout programs or something like that, it is not inflationary, or at least it doesn't devalue the dollar. Um, and the adverse impact on the consumer if we've got tariffs that is higher prices for the consumers are paying. And Biden with green tech spending, right? It's not to the same scale. I think like 3 trillion versus 7 trillion when Trump was in office, but everybody's spending money. So if inflation is still a concern, is still an ongoing concern, and US debt levels and global debt levels are still a problem, neither one gets better with either of these guys in office. So I think the market looks at it and sees, all right, well, it doesn't really matter.
Right.
There are going to be some sectors that outperform, like green tech will do better under Biden, but US manufacturing will probably do better under Trump, although Biden has been hammering tariffs for solar panel, or has been hammering imports for solar panels. And I think, um, has he done anything on EVs? Uh, did they
Well, there
announce?
was there was the tax credit on EVs, $7,500 tax credit.
I
Um,
was thinking more like trade policy stuff on EVs with China. I know, I don't know, like who knows what it's going to look like when either of these guys are in a second term, right? Because the second term is when the guardrails come off and you do whatever you want because you don't have to worry about reelection.
yeah, no,
Uh,
that's true. But I think just even stripping away all the very different policies of each. I think just like you said, in modern history, this is the first rematch of two people who have already been president and therefore are known quantities, at least to the market. The market just is superficial enough to be like, okay, we know what to expect under Trump. We know what to
yeah.
expect under Biden. Um, and that makes it, if it had ended up being Biden versus, say, Nikki Haley, I wonder if, like, I don't think there'll be, I mentioned the 3 months prior to the election often are down to flat. I would guess they might be closer to flat this time just because there's not going to be any angst about some unknown quantity coming into office. It's going to be a known quantity coming into office, regardless of what you think about the known quantities.
Yeah, I think that's probably a safe takeaway is that it's choppy-ish, flat, right? We've been talking about it. The interest rate picture probably doesn't meaningfully change. Valuations are still probably about the same. There's not the there's no there's really not any huge catalysts on the horizon politically since they're both known quantities. So a choppy market, a flattish market would be, I think, a good outcome,
Yeah, and I think
all
Fed
things
and
considered.
inflation matter way more than who wins the election this year. I don't even know that who wins the election matters a whole lot to the market. I think that there is an election matters to the market.
Yeah.
It's no matter who wins, which party, stocks typically take off after that, unless there's something going really, like in '08 when Obama won, it was right in the midst of the worst recession since the Great Depression. So stocks were just in the middle of a free fall. But when he was reelected, they went up right
I
after.
think if we got a wave election, Wall Street tends to like it when you've got opposing parties in control of Senate or the House and the
Yeah.
presidency because everybody just stymies everybody else's policy efforts, and then it's just sort of business as usual. So maybe if we've got a wave election, there's
Yes.
a more pronounced effect. But from where I stand right now, I don't. I think that largely it's a nothing burger.
Yeah. I mean, I think, yeah, bottom line is just historically speaking, next couple months, you can probably make some money, especially after this pullback. But I wouldn't expect August, September, October are not great months for the market anyway.
Yeah.
And I think that'll especially be the case this year. So, you don't necessarily need to batten down the hatches by mid-August, but I wouldn't go into it. Sometimes people think, oh, Wall Street's returning from their summer vacations after Labor Day. Let the buying commence. Usually it's let
Yeah.
the selling commence. um, and
Yeah.
probably be the same this year.
Last year, last May, we were talking. It's like this year is not a sell in May and go away, and that
Hmm.
turned out to be prescient. And this one, for the first 3 weeks of the month, it looked like, hey, no, this is another one where that doesn't apply. But the last week sort of put paid to that. So yeah, it looks like sell in May and go away kind of applies. Don't expect a ton from the market over the next couple of months, and we'll reposition and see what things look like at the end of the summer. That's another opportunity for the Fed to cut more
Yeah.
inflation data, like all the stuff that is sort of meaningful for valuations and for momentum investors. We get closer to the next quarter earnings. So yeah.
Yeah. Well, speaking of earnings, it's a good segue. Software stocks. The earnings season is essentially over. 6% growth, so way more than expected. Pretty good. And a lot of software companies, software stocks, had decent earnings, but not good enough. We talked about this a couple weeks ago. So the same phenomenon we saw, I think, after the second quarter last year, where a lot of companies and software companies in particular are selling off on despite earnings beats. Well, some are selling off on earnings misses, but um, Dell, MongoDB, Nutanix, a number of others. You have some of the more specifics down 20% or more on earnings in the last few weeks. Nutanix down 22% yesterday on earnings. Um, and that was just on a guidance miss. I think the earnings themselves were okay. Yeah, weaker guidance. What do you think is behind the software in particular earnings blowups?
Well, there's two things that come to mind. One is more speculative. The first is what we were talking about earlier, where a lot of these names ran up on hype, on the AI hype, um, and the premise that we were entering like a new era. In the last, I'm looking at the chart for MongoDB. It is a general purpose database platform. They're down 25% today, just over 24%. Um, in the year, they were actually pretty flat in the last, I'm sorry, year to date, they're pretty flat. In the last year, they were up as much as like 80%. CRM was
Mhm.
another name. That's Salesforce.
Salesforce.
They do customer relationship management software. They were trading at 250 a share in December, and we're up 10% in the end of May, but they got up as high as 20. They were up as much as 20% with the March highs. They're trading at 219 right now. Valuations got up there. The earnings were good, but they were the expectations were so high that there was only room for disappointment. The thing that I think might maybe is impacting it is an extension of the AI narrative. A lot of these software companies, if you're running database management software, if the AI thing is real, which I reserve judgment on, but I don't think it fully is. But if it is, what good is your software? What good is your service? If I'm customer relationship management software, if I'm Salesforce, why do I need to layer on third party Salesforce software onto my data if I can just use an effective AI tool and tell it to do the exact same thing that CRM is doing? So they benefited from a speculative bull market, but I think if you stop and think about it, well, if the bull thesis for AI software or for AI tools is correct, that ultimately is bad news for a lot of these software companies.
Right.
You can just in-house a lot of the stuff that you would pay providers for. On the flip side, if the AI narrative ends up being vaporware, well, even then you've got inflated prices on the back of earnings that aren't sustainable. So I don't think that there's a net positive. I think in the extreme cases with sort of any AI outcome for these software companies, there's not really a net positive that justifies the inflated valuations. So um, I don't know, the AI thinking has just sort of been running in the back of my mind and just wanted to talk it out. But I think valuations got extended.
Yeah, I mean, I think it's similar. We talked about, Q2 of last year where it wasn't as centralized. It was more widespread than just software stocks where good companies reported, really solid earnings were just getting crushed. And it was almost universally tech stocks that had gotten a little out over their skis. It had run up a lot. Because, last summer, at least the early part of last summer, there's a big run up. Again, it was a bit thin, but a lot of tech stocks and AI plays in particular had run up from, I guess May through like mid-July or maybe end of July. And then all the earnings started to come out. And there are all these AI related or just, tech related stocks that were at, all new all-time highs. And so anything shy of, a massive earnings beat and, jaw-dropping guidance didn't cut it. And a lot of them fell 10% or more. And we're seeing that, maybe more sort of localized to software stocks this time with them, a lot of them coming in at all-time highs and falling 20% or more. We're just not in a market. We're not really in a risk-on market. Maybe
Yeah.
we were for a few months from November through January, maybe February, but it's not that market again right now. And people just don't have the appetite to buy stocks at all-time highs at elevated valuations on earnings that are, good, not great.
Yeah. Yeah. I wish there was like a sexier takeaway other than it's harder to make money for software companies right now.
Yeah.
Business spending is maybe weakening a little bit. I think we saw that in the revised GDP numbers that business spending had actually declined. Um, it's just a tough market, and
Yeah.
it probably is setting up to be. I mean, without the AI bubble, you were saying that with the equal weight and the small caps, we were at 2022 levels. Without
Mhm.
the AI bubble, I think the large caps would have still been at 2022 levels. Um,
Yeah.
it's a tough market to make money in for businesses, for anybody, and especially if you need to borrow money. The fire hose of free cash from low rates has been shut off. So now we need actual earnings growth. We not just the promise of future earnings growth, we need actual earnings growth. And we need more of that than valuation expansion, which isn't what we've been getting thus far. So it's a
Yeah.
tough environment.
Yeah. I mean, if you look back at like what the market did in early 80s, during time of the last time of really high inflation. No, it's not as high now as it was,
No.
2 years ago, year and a half ago. But people weren't making money back then. So the AI thing has been the one saving grace, or
Yeah.
Mag 7 plus AI. It's been the one saving grace where it's like those are having a bull market, but nothing else is. And so those have enough pull that it is technically a bull market, but if the market is equal weight index is not up for almost 2.5 years now, coinciding with almost completely coinciding with, um, Fed hike, putting their foot on the pedal of interest rates and inflation reaching as high as 9%. Um, I think until that changes, nothing's going to change fundamentally with the market. I think there's still going to be some hesitation out there.
Yeah, I think there's still room for maybe a FOMO trade, right? I think that AI was probably return seeking behavior by a lot of
Mhm.
people where maybe we got overexcited by the prospect of being able to generate meaningful returns from something. And
Yep.
just because it seems to be sort of petering out doesn't mean that we won't see another opportunity like that arise. I think there's probably there will be windows of opportunities where sectors draw that FOMO trade or that return seeking trade. I don't know what they'll be. Um, I think that'll be sort of narrative driven, but a little bit of sideways trade for a while is not the
Yeah.
worst thing in the world. Maybe
No.
look harder at dividend stocks if you've got some sectors that you like and you've got company A paying a dividend and company B is not. Grab the one with the dividend if all other things being equal and generate a return while the market sort of ping pongs between well, I don't want to say ping pongs, but sort of moves laterally.
Yeah. Yeah. Um, well, yeah, I feel like I'm starting to sound like you've bear pilled me.
Yeah, it's
I'm trying to sound
contagious.
more like you. Yeah. Okay, let's go to a somewhat more optimistic segment. We're just calling it buy, sell, hold. We've selected, I believe, 10
Yeah.
stocks between the two of us. We're say, what would you buy, sell, or hold this for the next, we're saying the next year. So through next May. Um, and if the ones we're wrong about, which will probably be, more than five. Well, what's the over under on how many we're going to be wrong about here? I guess we're going to have different takes, so it's hard to gauge, but six and a half.
I was going to say over under of 4.5 that we are consensus right about. I think
Okay.
you and I will agree
Right
on.
about. Yeah. Yeah.
I think you and I will agree on four of them that will end up being correct, and then I think we'll have a bunch of no, or we'll have a couple of disagreements, and then we'll just be wrong on some.
Yeah. I'll write these down so they'll be fodder for um, hot sauce punishment 2025 in June. Okay. I'll start my first one. Biggest stock on the market this year, NVIDIA. Uh, it, famously really led the market this year, carried the market this year, or at least at times, up 120% year to date. Um, Last 6 months, 133%. Pulled back from all-time highs. It was at 1148 just a couple days ago. It's pulled back. It's below 1100. Do you think Nvidia will be a higher a year from now? Would you buy, sell, or hold?
If I already had it, I would be a hold on Nvidia at these
Mhm.
prices. Um, we've been talking about the AI thing and the market leadership and all that. I'm not going to be quick to pull the trigger. I've thought it's been overvalued for a while. I continue to think it's overvalued. But if I'm holding it, and we're presuming that I've been holding it for a while, I'm holding it at all-time highs. I'm probably putting actually a kind of a looser stop than I normally would, because let's say you could have bought it a month ago for what 940 a share, so you're up 20% almost
Mhm.
since then, or give or take. I'd probably have a loose stop on it, but I would be a hold on Nvidia.
Yeah, so the reason I asked this first is I literally got this question from a subscriber the other day. Like, Nvidia, this was after its earnings and it, gapped up from 950
Yeah.
to, new all-time highs, but near basically 1150 in a matter of a week. Um, at the time I said, and I still believe this. I agree with you. Hold. I'm going to say hold. If you own it, I certainly wouldn't sell it. I mean, there's a reason that there's so much fervor. It's the leader in AI, and I don't think while AI stocks have maybe gotten out over their a little over their skis, I don't think it's going away. I think Nvidia is here to stay, and if you bought it now and held it for 10 years, I think you'd do very well. Next year could be a little bit more choppy. So yeah, hold if you own it. Certainly don't sell it. Um,
They
but
also have a split
if it
coming
dipped
up.
another, what's that?
They also have a split coming up. That's historically good for
Yes.
stocks.
Yes, exactly. When does it say when that's happening?
June 7th, I believe, is the
7th.
date. I continue to be astounded that people value splits. They're meaningless, but market likes them. So what are you
Yeah,
gonna
I
do?
know. It's all about the um,
Optics.
yeah, optics, sticker shock or lack of sticker shock, I guess. I don't know. But if it pulls back another, say 100 points, back to around where it was pre-earnings, I'd maybe say buy. Just because, it rarely stayed down for long the last, year, or at least since, the rally began, last November. Um, but I'm going to say hold at these levels. So we're in agreement there. Okay. What's your first one?
My first one, meme stocks, GameStop. It is trading at its pre-brief 3-day spike. Once again, it's around $20 a share.
Mhm.
AMC is doing the same thing. BlackBerry is doing the same thing. Would you buy, sell, or hold meme stocks for the next year? And I'll let you can piecemeal it if you want and say, oh, I'd buy GameStop or whatever. But
Sell. Um,
so
I just don't believe in them. The air has already quickly come out of the balloon after mm, pretty, big but very brief run up. What GameStop went from 17 to 48
I think
in
that was a closing high.
closing
Intraday, I
high.
think
Yeah,
it got
sorry.
higher than that. Yeah.
Yeah, in a matter of a couple of days, back down to 22. I mean, 2 months ago, no, sorry, a month ago, it's trading at $11. So if I think it's more likely to fall back closer to that level
Yeah.
than to go back up towards, 48. Yeah, especially as we just talked about, it's not a risk on market. Maybe that changes in the next year. Hopefully it does. Um, but I I don't think meme stocks will be the first that people will be swooping in to buy up. So sell.
I'm gonna go hold on
Okay.
GameStop, but with some qualifiers. Um, namely that, all right, if we are seeing a market that is choppy and moving sideways for, let's say, the next year, which is the sort of premise that we've got here, there's sort of an asymmetric upside to the random meme stocks. If I bought it at 11 or 17 or 20, I'm probably still holding here.
Mhm.
Um, Especially if it's a small position, which is the only position size that's appropriate for something that's highly speculative like this. Do not throw your full portfolio into something highly speculative.
Right.
But if I own it at this price, I'll hold it for a little bit longer and see if maybe there's a resurgence as people do that thing that I was talking about, that return seeking, if maybe it gets a FOMO trade behind it. But it's definitely a gamble.
Yeah. Okay. So I'm hold or I'm sell your holds. All right. My next one, gold miners. Gold prices are just down from all-time highs, over $2,400 an ounce. Gold miners have had a good year, as a result. We talked about sort of the reasons. We had Cliff Droke on, who's a gold and metals expert, on a few weeks ago. If you missed that episode, we're talking about sort of the reasons behind the new gold rush here. Um, there's a lot of it has to do with you know uh, inflation rates. All that. Some of the same reasons that have been weighing on stocks has been good for gold, because people typically it's sort of a flight to safety. Gold has always been a safe haven, and people are fleeing to gold as sort of a safe haven now, and also some geopolitical risk with multiple wars,
Yeah.
major wars going on is part of it too. So gold prices have run up, and year to date, gold miners GDX, going by the GDX gold miners ETF, up 13% year to date, and have really spiked in the last 2 months, well, as the market has gone sideways or down a little bit, up from 25 to 35. It is a sell for me. Um, I'm not a huge believer in gold as a long-term play. I just think the fact that this is the most valuable gold has ever been, um, and yet it's not that much higher than it was, say, after the Great Recession, um, or you know, around when after COVID, when it spiked. I feel like gold is sort of always sort of a fleeting, safety play, but it doesn't really stick around much. And I think a year from now, I think gold miners will be lower.
I'm I don't love gold miners as much. For the sake of the game, I will say I'm a net buyer of
Really?
gold and gold related plays. Um, yeah, I mean it's whatever. It's my catastrophizing, right? Globally, we are at a 300% debt to GDP ratio. We are in the midst of, we have the highest global debt levels since the great financial crisis.
Mm-hmm.
I'm probably, if I were actually implementing it in my portfolio, I am probably dollar cost averaging gold in small portions directly and not buying up the miners, which are going to have some variability in their returns. I like gold as maybe more of a safety play, but I'm a net buyer of gold at these prices.
Okay, we'll mark that. That's our first big disagreement. All right, GDX is at 35 right now. Writing that down.
Yeah, I don't love the miners so much, but given that that's the name of the game, I'll stick with my buy.
Okay. All right, what's your next one?
Next one, let's go with weed stocks, marijuana related stocks. Had a nice pop after the rescheduling news came out and have since come back down. Right now, MJ, which is one of the more popular ETFs for it, is trading at 369.50. It was trading as high as almost $5 a share, 469 on May 1st. If we look at MSOS, which I know is one that Michael Brush, our Cabot cannabis investor, chief analyst, likes, that's trading at about $8 a share, so it's near March lows. I like weed stocks right here. I'm a buyer of weed stocks.
Yep, I
I
agree. I'm a buyer. Although I will say this is the easiest sector to get shaken out of, and I don't blame anyone for being frustrated by the cry wolf nature
yeah.
of cannabis stocks over the last few years. I mean, my God, like the rescheduling thing has been on the table all year, dating back to what, like last September, October, when they first spiked. The MJ, it was end of last August, MJ ETF that tracks the sector spiked from 289 to 440 last August and September, and it came back down. And then, anytime there's been, light at the end of the tunnel on rescheduling from class 1 to class 3 drug, which would open up a lot of financial avenues for cannabis companies, as Michael detailed in his Michael Brush, our cannabis expert, detailed in his latest issue this week of Cabot Cannabis Investor. It's on the cabotwealth.com site if you want to check it out. I recommend subscribing. It The pattern has been every time, it runs up, it'll run up for a few days and then come crashing back to earth. But it has stair stepping is too clean a term for it. It's just scratched and clawed its way up over the course of the last year, up 21% in the last year. And mind you, this is after just a major crash from, the MJ alone was at 32. No, it peaked in late 2018 at 40. Again, now that was $40 a share, and it's now at 369 a share. I think there's plenty of momentum and plenty of potential catalysts, including rescheduling, but also the Safer Banking Act we've talked about a lot, which who knows if that makes it through Congress, and legalizations potentially in Florida and elsewhere. There's too many potential catalysts out there for this not to keep going up. It's very frustrating to hang in there with. I would recommend just buying the MJ or the MSOS, just not looking at it for a year,
Yeah,
so you don't get shaken out. And I think it'll be higher.
yeah. The alternative to that is swing trade it. If we're really at like period lows, which most of those ETFs, they look like they're at right around 2024 lows, or sort of the post rescheduling lows.
Mhm.
I think there's room to swing trade it. But the comment period for rescheduling ends in July. So
Yeah.
you might be looking at a couple of months for them to sort of finish bottoming and then swing back up. But yeah, I think that's another one where we're in alignment.
Okay. Next one, Bitcoin. I
So,
was very bullish. I was very bullish on this one. You said sell.
so
I agree. I was very bullish on this one end of last year, uh, when it was down. Let's see, where was it? I think it was in the high 20s when I said it's going to 40, which it did. And then I doubled down and I said it's going to new highs above 65,000, which it did. It got as high as 71,000. Just a few closing high, 71,000, sorry, 73,000 in March, right around the time the market was peaking. It's a bull market play. Um, and well, I don't think stocks will be down in the next year, excuse me. I think the pattern with Bitcoin is that it'll rise to new highs and then come crashing back to earth. Well, I think it'll come crashing back. Probably not as long as the bull market stays intact, but it's still close to all-time highs at 67,000 right now. I'm not a big believer in it. I don't think it has any utility other than as a bull market play, and I don't know that it'll be a big enough bull market in the next year for it to really meaningfully be higher.
yeah, I don't think there's any catalyst that drives Bitcoin higher. There's no the major catalyst was the ETFs. It came and went. Halving doesn't do anything for Bitcoin. Entirely speculative. Talking about you and I've been talking about how it's sort of risk off.
Mhm.
Bitcoin's failed to set new price highs. If it goes back down to 30, I'm maybe
Yeah,
looking at it there.
yeah,
But
but
I
it's
think
not
if
right
it
now.
no, no, right now
Yeah,
I'm a seller of Bitcoin. If it goes back down to 30, I'm not trying to catch a falling knife. I'm waiting for it to bottom. But I think that you could maybe have a trade there at some point in the next calendar year. But no, sell
yeah,
it.
not right. Okay, you're next.
Okay, let's go with Pinduoduo, PDD,
Mm.
Chinese stock. They have been doing well the last month and a half or so, although I think Baba just came way down recently, if I recall correctly.
Yep.
Currently trading at Pinduoduo is currently trading at 149.38. They run the Temu marketplace. Um, I'm a buyer of Pinduoduo. My fear is that they're trading at all-time highs, and if the air really, or they're trading, I'm sorry, they're trading at 2024 highs. All-time
Yeah.
highs were back in
196 in early February 2021.
yeah, if they find, especially if they find short-term support at these levels, that's an ongoing bull trend that it's been in since the 2022 bottom.
Yep.
I think there's maybe more opportunity in China than there is in the US. So
Yep.
I'm probably a net buyer here, absent the air just totally coming out of the market.
Yeah, I'm a buyer. I'm literally am a buyer. If we had Larry on, Larry Chung on, who you spoke with again about a month ago, when we had him on, what, last fall, he mentioned this company. I bought on his recommendation. It's done well, and it's still, like I said, it's well shy of its all-time highs from 2021, which were close to 200 a share. It's now at about 150 a share. Um, yeah, I like its prospects for the next year. I think Chinese market has been undervalued, and this is a clear leader right now.
Yeah.
So yeah, bye.
All right.
Okay, we're aligned there. All right, let's see if we can zoom through the last few. My next, or no, is it? Yeah, it's me.
Yeah, you.
Uh, Tesla.
So sorry,
So I
sorry. Go
know.
ahead. I
No,
shouldn't
no,
have stepped on
I
you. Go
like the
ahead.
quick, I like the quick answers. Right now, 175. I mean, it's set up, it is set up shop. It is set up, you know, a camping site in the 170s for like the last, let's see, most of the year.
Yeah,
I
since
mean,
February,
170s,
basically.
180s. Most of the year, it did dip um, as low as 142 in April after another disappointing earnings report, but then just keeps returning to the 170s. Um, so you're a sell. Tell me why you're a sell.
I so here's the tough thing, right? If you've been in Tesla for 10 years and you're
Mhm.
up 9,000% or whatever, you, there's no impetus to sell right away. If I
Mhm.
bought Tesla at the beginning of the year, I'm probably looking for opportunities elsewhere. But if I'm a long-term holder, I'm probably more in the hold camp with,
Yeah.
like we were talking about with NVIDIA, it's like hold with a loose stop. Um, the fight over Musk's compensation package looks so bad to me.
Yeah.
I mean, it basically looks like he's holding the company hostage, saying, you're going to lose innovation if you lose me. Like all that, that's a bad look. I don't love the optics of that.
Those optics will fade, and the argument will fade a year from now.
Yeah, but it's
Sooner.
there's always something.
I
It's
know. I
Twitter,
know.
and then it's the pay compensation, and then picking fights with guys rescuing kids in mines. It's like I think I just have Musk fatigue. So it's like, all
I do
right,
too.
I'm done. I'm just done. If I'm a long-term holder and I've been in Tesla shares for a long time, I'm a hold with probably a loose stop because you've got a lot of profit cushion there. But if I'm a new buyer, I'm probably getting towards the end of my rope. Um, yeah, so my vote then would, well, you can mark it officially as sell being my
Okay.
vote for Tesla.
I'm a hold. You mentioned for for people who are longtime holders. I think I could just say this because it's I think a lot of people know this already. In stock of the week, one of the portfolios I run, my predecessor there, Tim Lutz, famously recommended it in December 2011. It's up. You mentioned 9,000. It is up more than 9,000% since. It is a hold in my portfolio. It's been a hold for a while. It'll be a hold until you
The
get
end of
another.
time.
What's that?
Till the end of time.
Maybe no, and it was a buy, late last year when it was, still acting pretty well, and importantly, the earnings weren't as troubling as they have been the last few quarters. I agree with you. I have Musk fatigue. I I'm pro EVs and not so much. I'm a buyer of Tesla. I'm not a buyer of Musk. Really,
Yeah.
so net, I'm a hold. But if
One
they can turn around their earnings, and maybe solve the like narrowing profit margin, all the competition they're getting, lower prices from competitors like BYD. um I think they'll turn things around, but I'm a hold until I see proof that they can actually turn things around.
Yeah, I think one alternative if you're like a long-term holder and you're getting tired of Musk, start selling calls on it,
Yeah.
right? It's been like you said, it's been camped out at 175 for a long time. Just start selling, 190, 200 calls, although that gets you within the 52-week high, I believe. Yeah, because it was trading just at 200 back in March. Start selling like 225 calls or something, and at least get paid to hold the stock instead of just sitting on a stop loss or something like that. The two things that I saw that I think maybe put me more in the sell camp. Jeep came out and said that they're going to roll out a $25,000 straight EV, right? Like it's just going to be a pure EV play.
Mhm.
BYD apparently released a model that gets 1,300 miles. It's a hybrid that BYD announced. I haven't seen it. It could be like a smart car or like a mini car. I have no idea. 1,300 miles on a full tank and a full battery. Right? Like if that's the game that if that's the competition that we're facing, is Jeep coming out and saying that hey, Tesla, you've been promising $25,000 EVs for a long time. We're actually going to do it. And then BYD, who obviously the trade situation with China makes them a wild card, right? If we have no BYD sales in the US, whatever they do is meaningless.
Yeah.
But if we ever allow it, or if they start manufacturing in Mexico, or if a Mexican holding company starts using BYD tech to sell what is essentially BYD cars in the US, right? Like who knows what's going to happen with that stuff. But if that's what the competition is now, 1,000 miles per tank and full battery charge, and a $25,000 American-made Jeep SUV or Jeep probably Wrangler or some mini Wrangler or something. That's the competition now. You can't just rest on your laurels. So
Yeah. I mean, I
it's
love
getting
BYD.
fierce.
That was literally my pick for this year. But the China thing has held it back. But it's making some progress recently. Um, yeah, I'm more of a buyer of BYD, holder of Tesla. I'm not ready to just abandon ship on the leading
Yeah.
EV maker, in the world, but also notably as you said, in the US, place where BYD isn't. Okay, let's move on to our last three. Let's try and zoom through these.
All
You're
right. We'll make these quick. Utilities. I'm a buyer.
let's see. Where is the? Let me look at a chart.
So XLU
XLU, yeah.
is the most prevalent utility
Oh,
select spider fund. It's trading at 20, let's see. It's trading at the highest levels that it's been at
71.
since 2022. Um,
Sell.
Distribution yield on XLU is 3.26%. You're a seller?
I'm a seller.
All right, I'm a buyer.
I think it's a risk on off market right now, which is part of why utilities have spiked in the basically since the market went to hell is too strong, but sort of the rally fell apart in April. Utilities have spiked from 62 to roughly 72, 71. I think the market will be up and risk will return probably post-election, or at least post-Fed rate cuts. And I think that's when we'll see some weakness in utilities. If we were setting this up for the next 6 months, I'd be a buyer.
Yeah.
A year, I'm going to say sell.
Okay. I will say I think there's probably better individual plays than just going out and buying XLU wholesale. That 3.26% yield is fine, but not great. I think there's better individual names, but for the sake of the exercise, net buyer there. What is your next stock?
Trump media
So,
feels like a timely one, down 7.3% today. It's not that much considering the guy whose name on it was just convicted of 34 felony counts. But he still also could be president. Let's see. It's at 50, no, so at 48 right now. IPO'd around, this is first day public. Let's
so
see.
it went through a SPAC. So the
Yeah,
IPO
SPAC, yeah.
pricing is sort of the first day or the first couple of days public, it went when it did the ticker change, it went as high as $50 a share.
Yeah.
50.20 was the high on January 22nd. Ran up a little bit before that from the SPAC price. The SPAC price was $10 and it was trading around 17. Um, it's not a profitable company. There's really no pathway to making money. It's a show of, I don't know, investors are showing support for the former president, and it is a possible avenue for for deep pocketed supporters to directly direct money to the candidate and former president.
Yeah.
I
Well,
there's no rational reason to own it, like no good faith reason to own it.
yeah, I think it's only it's playing into people's passions.
It's it's
There's only an emotional reason to own it.
it's GameStop. It's GameStop without the short, right? It's gonna have people that will pour every penny into it, and maybe it runs back up to $50 a share. It is totally a stay away for me, which is why it's a sell. I wouldn't buy it in the first place.
It's a
It's
stay
it
away for me too. This just is, I had to put it here.
Yeah, it's not
Uh,
it's not going
the
to act
timing's too perfect.
rationally.
Yeah. Timing is
It's
too
not
perfect.
All right. My last one, just we'll make it quick because it's off a lot today. Dell, dude, are you getting a Dell? Trading at 132.83. It's down 37 points today, 21% after like we said earlier, beating both the top and bottom lines, but not showing that sort of growth promise. It's trading at April highs and is up 77% the last 6 months.
Mhm.
It's up 180% in the last year, and it is up 300% in the last 5 years.
Dell is a sell. Big.
Yeah.
Yeah, no, I mean, when you think of innovation these days, you don't think of Dell anymore. And given the run up, despite the 22% pullback today, I'd still say sell. Yeah, I guess you could say hold, but I'm going to say sell. I'm not a big believer in it.
Yeah, same boat. It's I don't I don't know what it's doing there. Nothing about their processes are particularly innovative. They do a lot of PC volume. They don't. I think they said that their data center efforts are a money loser for them. So or loss leader was the terminology. That's like when your local grocery store sells T-bones for 7.99 on the front page, so you come in and spend money on Lay's potato chips or whatever that are slightly marked up. If data center is a loss leader for you, given the environment and given the prevalence of cloud and continued growth there, I don't want anything to do with you. I am a sell on Dell.
Okay. Yeah, we agree there. Okay. In summary, you are more bullish than I am. You have four buys. Your buys are gold miners, cannabis, utilities, and Pinduoduo. Mine are cannabis and Pinduoduo. I have two. Wow. I guess maybe I'm more bearish than I thought I was. I do. Let's see. Holds. I have. You and I both have NVDA. I'm a hold on Tesla. You're a sell. You have one, two, three, four sells to my one, two, three, four, five, six sells. My gosh.
Man,
All right. Well, I'm gonna have to rethink.
your whole
I,
existence at this
I
point.
know. Yeah, I thought I was the optimist here, but I don't know. Maybe it really is truly a stock picker's market, and these just the ones we listed are
uh,
not my cup of tea. Outside of Pinduoduo and cannabis.
I'm gonna be sitting in my bunker getting high and ordering things off Temu on my pile of physical gold bullion, is what it sounds like. Or bullion.
I can do two
You
of those things at
Yeah,
least.
there you go.
Yeah. Okay. Well, that was fun, and I've written these all down. I'll put them into a document so we can track these if we remember them a year from now. So there are consequences. Thanks for joining us. As always, like and subscribe whether you're watching on YouTube or listening on Apple Podcasts, wherever you get your podcasts. 5-star rating, all that stuff helps us. We will be back next Friday, and until then, have a good weekend.